Hi, I'm John Persinos, Editorial Director of Investing Daily. Welcome to my video interview with my special guest, Richard Aboulafia. He's Managing Director of the aerospace consulting firm AeroDynamic Advisory. Since 1988, Richard has tracked aircraft programs, markets, and companies as an analyst and consultant. He manages consulting projects in the commercial and military aviation field and analyzes broader defense and aerospace market and industry trends. He has advised numerous aerospace companies, including most prime and many second and third tier contractors in the US, Europe, and Asia. He advises numerous financial institutions on aerospace market conditions. Richard also serves as an emeritus director at the aerospace defense consulting firm Teal Group. And you should know that Defense News, the trade magazine for the defense industry, has voted Richard as one of the 100 most influential aerospace defense consultants in the world. So we're privileged to have him here today. Richard, thanks for joining us.
Oh, it's great to be here, John. Thanks for having me.
Yeah, you bet. Richard, you and I have traveled a lot of international air shows around the world, in Paris, the UK, Berlin, Singapore. I miss that expense account.
I think we all do. The good old days, maybe not quite in the rearview mirror, but not what they used to be, right?
Yeah, that's right. Well, let's get right to it. I want to tap your expertise. Now's a good time to do it with geopolitical uncertainties rising and the commercial aerospace industry under pressure. Since the pandemic outbreak, the commercial airline sector has been under enormous strain. They lost a lot of passengers and they started to bounce back. And now COVID has reemerged in China, and the Russia-Ukraine war has come along as a black swan to throw economic projections into a cocked hat. Aerospace, the commercial aerospace industry has bounced back to a certain degree, but how long is it going to take for it to get back to pre-pandemic levels?
Yeah, I remember when it started 2 years ago, and we were wondering what the shape of the recovery would look like, V, W, L, Nike swoosh, I don't remember anyone saying, hey, it won't be smooth, right? And it's not been smooth. There are a lot of zigs and zags depending upon the variant, depending upon the event. However, the trajectory remains pretty consistent. Sometime in mid to the second half of 2023, we're going to get back to where we were in 2019. The problem is it'll take us a while and you never really catch up. You've lost ground. Our latest estimate shows that in 2025, years after, hopefully we'll forget COVID, we're still going to be 11% impaired in the airline sector relative to where we would have been if none of this had happened. And then on top of that, as you say, you've got the Ukraine. That unfortunately is delaying just a modest amount of the recovery in international traffic. But thankfully, domestic markets are still on track for recovery.
Okay. Energy prices have been soaring, obviously. Supply and demand for crude oil are out of whack. And after labor costs, fuel is the most expensive overhead cost for airlines. The soaring price of crude, although crude has come back a little bit lately, but the soaring price of crude has really hurt the profit margins of the airline industry. How badly has it hurt the commercial air carriers, and when might they finally get some relief?
Well, obviously you can lose a lot of money betting on the future price of oil. But
Right.
most people Energy Information Agency, the latest estimate from the government is that average prices this year for West Texas are about $101 a barrel, which is bad, but not catastrophic. Peak is still 147 non-contract price back in July '08, memory serves. We're going to see they're going to gradually have to pass on these costs in ticket prices to the consumer. Right now, they're a little concerned. They haven't done much of that because they're concerned about the fragile nature of the air travel recovery, but they're not going to have much choice. Pretty soon, you're going to see higher ticket prices. Hopefully, that won't put the kibosh on the recovery, but it's an area of risk.
Russian President Vladimir Putin's invasion of Ukraine has spawned severe Western sanctions, and it's also prompted a lot of Western nations to boost their defense budgets. What's really startling is how Germany has put aside its post-Nazi pacifist stance to announce big increases in its military budget. That would seem to be good news for aerospace defense contractors. A lot of that money ends up in the coffers of the US-based defense giants. Does that make aerospace stocks a good bet now, or have these defense budget increases already been priced into their share prices?
Since February 20th, there has been a pretty significant rise in share prices for a lot of the major A&D companies, but I think for the right reasons, and I think this might have some traction ahead. I think we're just coming to terms with the new realities of the geostrategic environment. It's pretty clear there's not going to be a sudden happy end to this. We're going to be in a confrontational situation. Also, what is not happening is that China is not breaking with Russia. In other words, we face the nightmare scenarios of the Western democracies confronting two potential peer adversaries for years to come. This is a human tragedy of untold proportions, but it also means much higher defense spending for a long time, not just because of the need to deal with this threat, but frankly, the need to make good on the hollow force that resulted from the procurement holiday of the post-Cold War period. So Germany is a great example, you're right, but many others are following. It's a lot of money coming into the industry.
Yeah, that's right. And the industry wasn't exactly hurting before. One thing you can always be sure of, I know this from my days of covering defense on Capitol Hill, is that the Pentagon doesn't have to go around with a tin cup. We're facing recession warnings right now, the inverted yield curve. Analysts at Deutsche Bank recently predicted that the U.S. economy will be in a recession by the end of 2023. Aerospace defense sector, the aerospace defense sector tends to be recession resistant, correct? Why is that?
Well, it's interesting, on the defense side, as the saying goes on Wall Street, defense is defensive, because there's absolutely, you go back to ever and do a data chart that correlates defense spending with economic indicators like recession years or debt levels, and you'll see zero indication. The only thing it's correlated with is threat and political perception of threat. That's it. And from a standpoint of defense spending, that's a guarantee. Because frankly, oh my God, how many years are we facing a very serious political threat, military threat here? So it tends to be fundamentally defensive. On the commercial aero side, it's interesting. We've, for the first time in my experience, badly lagged behind the rest of the economy. Normally we lead the way. Now we're lagging, and it's going to be really interesting to see to what extent the recovery from the pandemic keeps going, even if there is a recession. I'm betting it'll keep going because the dynamics associated with the COVID-19 travel downturn were so profound that we're still going to see a decent recovery even after the great economics, begin to slacken a bit.
Interesting. Getting back to aerospace defense, a lot of investors are surprised to learn that it's a recession hedge, that it's not just a growth prospect. And it's also an inflation hedge. That aspect of aerospace defense is underestimated, that aerospace defense stocks belong in any portfolio's inflation hedge sleeve. Could you elaborate on that a little bit for us?
Yeah, it's a key point to make because on the defense side, the overwhelming majority of defense contracts are cost plus. Whatever the contractors pay for labor, materials, energy, what have you, it gets reimbursed with a guaranteed profit margin on top of that. That's the nature of cost plus contracts. On the commercial jetliner side, which of course is a big chunk of the business, the truth is that hard assets, especially mobile ones like these, are actually a pretty good hedge against inflation. You wouldn't think that, but they work just fine. So broadly speaking, A&D is one of your best hedges against inflation.
Mm-hmm, mm-hmm. Are there any subsectors of aerospace that you find particularly appealing right now? Subsectors that are, pardon the metaphor, flying under the radar?
As you mentioned before, there's been a strong reevaluation of A&D in a positive way. Are there things that have been neglected? Yeah, I think so much of the cash is going to go into two areas. One is munitions, the other is logistics. The time-honored adage that you can never have enough by way of stockpiles of munitions is very clearly being tested, being very clearly highlighted by the Ukraine disaster. So I think you're going to be looking at full-time capacity for missiles lines for many years throughout the world, unfortunately, and munitions of any sort. And of course, all of the targeting capabilities and surveillance and reconnaissance assets that go with that. It's all about, well, the ability to target and the ability to destroy, sad reality. The other is logistics. The one thing that's been revealed yet again, we have to face these surprises every few decades, is, the spare parts and the equipment needed for deployment of military. The logistical capabilities is sort of the part that gets underfunded, especially in peacetime. People focus on the big ticket weapon items, but they neglect the bullets, beans, and black oil, I suppose you could say, dimension of it. And that's got traction for years to come too, because again, there was an aspect of the militaries in Western Europe, especially, were kind of a hollow force before this. And now you've got this and the revelation, they got a hollow force and the need to deploy all around the world, including Asia. That's a recipe for strong logistical requirements.
Bullets, beans, and black oil. It sounds like a good title for a book. Maybe that's your your next tome. You know, related to what what you just said, that also applies to the commercial sector. Isn't commercial aviation maintenance a hot field right now? There's a shortage of mechanics, and commercial airlines are in desperate need of adequate maintenance to keep aircraft flying.
Yeah, it's a real bottleneck. And here again, it's what I said before about us being, for the first time, on the trailing edge of the recovery, because we're the last to recover, unlike in every other cycle before. We're the last to hire. So we're being hit by labor shortages. We're being hit by every inflationary force that hits you when you are the last to hire and purchase. And of course, that has created bottlenecks. Now, the one complication with an MRO player with commercial jetliners is that it looks like the emphasis is on new build primarily to cope with high fuel prices, you know, the latest and best jetliners. And if the traffic isn't there, there's the risk that older, more maintenance intensive jets are going to be forced out of the mix earlier. And that, of course, means the revenue will be a bit disappointing from the sustainment standpoint.
Richard, I know that you hobnob with the top leaders in the aerospace and defense sectors. That you have the ear of top CEOs and policy planners. What are you hearing in your conversations with them? What are some of the trends that perhaps the broader public is not aware of that they're alerting you to that you could share with us today?
Well, I think part of it is the challenge of refocusing, not just in the US, but all of Western Europe and most of the democracies away from the kind of military priorities that have been, part of the landscape for the past 20 years, counterinsurgency, nation building, civil war intervention, basically what we call asymmetric warfare. That's going away and giving away instead to basically a return to peer adversary conflicts and confrontations. And so the buzzword these days is, basically a return to the strategic tools of statecraft. And that means ships and aircraft and tanks, rather than body armor, mine-resistant ambush protection vehicles, and light helicopters. Instead, it's a return to business circa 1989 and before.
Right, right. Well, Richard, it's been a pleasure and a privilege. It's always great speaking with you. Thanks for taking time out to be here today.
It's my pleasure, John. Great to see you.
Great to see you. Richard Aboulafia has just described why aerospace defense makes an excellent inflation hedge for your portfolio. Another time-tested inflation hedge is gold. For our favorite play on the yellow metal, click the URL you see at the bottom of the article that accompanies this video on the Investing Daily website. Well, that's it for now. I'm John Persinos, Editorial Director of Investing Daily. Here's to your wealth and your health.